Okay, so today's a really exciting day. The Liberal federal government just dropped its budget, and there's been a lot of lead up to today with a lot of conversation surrounding how it's going to impact and affect housing, which is really the top issue here that is on everybody's mind, not just the government's. And so we're going to break it down. We've been getting a lot of phone calls and emails from clients asking about how this may impact their decision-making process and what effect this may have on the larger market itself. Today, we have Jason Friesen, friend of the pod, mortgage agent and managing partner at Outline Financial, here to join us to chime in and give his perspective as well on how he sees the impact of this budget and how that will affect the landscape of the Toronto real estate market and how he's advising his clients to respond to and react to this. My name is Ralph Fox, and I am the co-founder and broker of record of Fox Marin Associates. And we are a residential real estate brokerage that focuses on central and downtown Toronto. So if you like this information, please feel free to hit that subscribe or like button. And if you have any comments that are constructive, we'd absolutely love to hear from you. So let's get into it, Jason. So glad to have you here.
Thanks for having me on again.
Always a pleasure, a repeat guest. So that says something about how much we like you. Okay, so let's talk about the budget. I think what's really interesting is the size of the budget. It's come in at over $52 billion and $8.5 billion in new spending for housing. Liberal government has really geared this budget towards young Canadians feeling frustrated and priced out of the housing market. And this is a little spoiler alert here. There's going to be a lot more spending and a lot more taxation. Surprise, surprise. So let's get into talking about the biggest pillar of the budget, which is really unlocking the housing crisis and opening up. I mean, they're pledging close to 4 million new homes to be created by 2031, which I find to be very optimistic. And they have a whole bunch of ways in which they think that they are going to get us here. So let's get into it, Jason. Financing, let's talk about that. I think one of the things that I actually think is amazing and certainly long overdue is there's been a lot of fraud, or at least a lot of talk about fraud in our mortgage system and in our lending, primarily with lenders and mortgage agents and brokers being unable to verify notice of assessments and documents that really form the decision-making process in when to lend or how much to lend. And there's a lot of talk of fraudulent documents floating around out there. And so to combat this, the Liberal government finally is talking about having some type of a system that liaises or taps into the CRA, which can verify income stated on NOAs that are provided to lenders. Jason, how do you feel about this?
It's amazing. You know, there's a few fintech companies that have been pushing for this connectivity over the last couple of years. And there were a few periods of time where it was available to a certain, kind of platforms that were using it. And then, there were reasons inside the government that, it stopped. So having this actually, become, commonplace with all lenders, I think is fantastic. First party, like mortgage fraud, fraud when it's not someone kind of stealing someone's ID, but someone that's actually committing fraud to purchase their own home, tends to center around income and, fabricating income documentation. So the lenders having the ability to do this, confirm this, and also hopefully the broker community having access ahead of time as well, is going to stamp out a lot of mortgage fraud. I think it's fantastic.
And long overdue. I mean, this is about 5 years probably too late. But still better late than never. I think anybody who wants to have a transparent, fair system is definitely going to be in support of this. Do you think this is something that will actually be executed?
Yeah, I think this is something that has been long wanted by at least, I'd say 99% of the mortgage industry, and on both the bank and the broker side and the lender across all platforms. I think it will be cause for celebration. I think this is fantastic. Anytime that you're able to stamp out, this, mortgage fraud, I think it just brings more security to the industry as a whole.
And have you seen in your experience personal examples of fraudulent paperwork, or are you hearing stories of that, or is that sort of just more out there in the ether? Like, it's not something you commonly come across.
It's not something that we commonly come across. I think, it's all about also upfront doing the due diligence.
Yeah.
On our side and pre-screening our clients. Does it exist? It absolutely does exist. You've got sophisticated people out there that create pay stubs and job letters and have money going into bank accounts. Like, it's actually like legitimately being paid to someone, completely fraudulent. In certain circumstances like that, no, amount of cross-checking you can do, will stamp that out. So this will definitely make it harder for those types of people to exist. But you always hear stories. I've been in the industry for 20 years and I've heard a ton of horror stories from both lenders and from brokers alike.
I've watched the CBC undercover exposés. So that's been my background privy to it. So, but yeah, this seems like a good thing overall. So let's talk about RRSPs and the Liberal government now allowing, it used to be or still is, $35,000 that can be withdrawn towards a down payment. That's been raised to $60,000, which seems very promising, just to the effect that $35,000 is virtually nothing.
It's like closing costs for an average Toronto property, right? A condo.
So raising that to $60,000 is certainly helpful. Like, what is your opinion of that? Do you have anything more to add from a mortgage broker position?
The first home savings account, the FHSA account, you can contribute up to $8,000 a year, total of $40,000. So if you have a couple, really, they could use $60,000 of RSPs and $40,000 from the FHSA account. That's a $200,000 that they can potentially tap into. And 2 years ago, it would have been $70,000 in total, $35,000 in RSPs for each. So I think it's fantastic. They've also pushed back. Typically, you had to start paying it back within 2 years of using it. And it's now pushed back that you can start repaying it within 5 years. So I think these are all, measures that are trying to help the younger generation or people that have a lot of their money locked up in registered investments be able to tap into this. It's also important to note, if you have someone who's recently divorced and maybe wouldn't technically be a first-time home buyer because they've owned in the past, provided that even if they've used their RSPs to purchase in the past, they've paid all of that money back into their RSP plan, those people are eligible again to be able to actually use their RSP.
Really?
So, it's important to note that, for someone that is separated or divorced, that does exist for them to use again. Again, the big consideration is that they have paid back any amount owing to the plan. So, they need to make sure that they're completely paid back on that. But it does give someone the ability. And I think it's 5 years, even if you've not gone through a divorce, if it's been 5 years and again, paid all amounts owing, you are technically considered to be a first-time home buyer again, as far as the RSP first-time home buyer plan is concerned. So I think it's great. I think, having access to the FHSA and then the increase on the RSP is actually going to make a difference for a lot of people.
And what's interesting as well, in conjunction with that, is that they've extended mortgage amortizations from 25 to 30 years, but they've been very specific with how they've done it. So they've only made it for pre-construction. And it's also really important to understand is that you're putting less than 20% down, and it's less than $1 million purchase. So you're going to have trouble finding a pre-construction project in Toronto less than $1 million where you don't have to put 20% down. Most developers are insisting that you have to put that 20% down. So I could see this maybe having a bit more impact outside of the GTA, where you have developers who may take less than 20 and you have lower barriers to entry. But I don't see this being as wide of an audience, for example, as the earlier initiative that we discussed.
The wording left the door open for, depending on how the program goes, for it to expand into resale, which would be great. But keep in mind, I think only like 15% of purchase transactions are high ratio. So it is a very small percentage of the population that are going to be able to take advantage of this. But again, if you've got someone, that is, and it does expand into, resale, that might be the extra boost, someone needs to get into a place, right? So
what's interesting is that this can start to become counter-cyclical. And I think the Liberals might be a little bit watching this and trying to be very specific because, for example, if they opened it up to resale, while it's only 15% of the market, I'm sure it's a huge share or a more significant share of first-time buyers.
Agreed.
And so I was reading this quote from Robert Kavik from BMO Markets, and he was saying that these type of initiatives might seem like great at first, but over time they can negate themselves because if it starts to keep up increasing demand and supply doesn't come with it,
up with
at a
pace,
certain price
absolutely.
point, it can actually drive prices up
Yeah.
and be counterproductive. So I think that's why they're being careful, or at least that's why they should be being careful. But if you just open demand without meeting supply in conjunction with that, in big cities like Toronto, you're going to have a problem. And can you tell me a little bit about permanent amortization relief? There wasn't much about that, but from what you understand, what does that mean?
So I think it's very much been left up to lenders to pick and choose on, being able to assist certain buyers. The Mortgage Charter of Rights basically outlines the kind of, I guess more putting it into policy where if you have people who are struggling to make payments and they can, claim that they're suffering from hardship, that banks can permanently extend out amortizations, even for CMHC insured loans. Keep in mind, as we were just saying, 25 years is typically the maximum.
Right.
We've had cases where borrowers have went to, up to a 35-year amortization simply from the point of view that banks are in a different spot where they're actually working in proactive with borrowers to not put them out of their homes. I think for, the first 19 years, actually, I'd probably say the first 17 years, because it started in COVID of my career, if you miss payments and you fall in arrears, your house is getting, you're going to go into power of sale, right? So I think, we're seeing a bigger shift towards banks willing to do this, and, the impact of these higher interest rates or some of the variable rates where the payments have stayed static. You have people that have amortizations that are in the 30s and 40s. So 30-year, 40-year plus, right? So I think this is great. And I think this will alleviate a lot of the stress that must be occupying a lot of headspace of people wondering if they're going to lose their homes or what happens at renewal. We're, started out at a 30-year amortization. Our amortization is 40 years because we have a variable rate where our payment hasn't changed. Knowing that you're able to stay in the house, again, listen, no one wants to pay their mortgage back over 40 years, but the other scenario of losing your home, this is a better option.
Well, also for the overall housing market and greater economy at large as well. Like everybody was pontificating that there was going to be a housing apocalypse when interest rates went from 0 to 500 basis points. And the shock to the system would be so extreme that there would be a deluge of properties going to market. And that just never happened. And shockingly, inventory has and continued to remain tight throughout all of this. And that's because something that people weren't projecting or anticipating is that banks were working with homeowners, and that banks never, ever, ever wanted to become sellers of last resort in a scenario where we are in a financial tsunami, because that would take down the whole economy. And
absolutely,
the fact that risk got negated out of the housing market pretty much probably saved the entire economy from crashing.
That, along with, let's be honest, as much as it was hated when it was first, put into practice, the stress test. I think we can all agree that the stress test kept our housing market where it is. Had we not had the stress test and you had people qualifying when interest rates were 1.59%, I think we'd be in a much different situation. So for me, as much as I know, it makes it much more harder, much more challenging for people to qualify. You qualify for less. I think that is something that has kept our housing market also on solid footing. So I can't argue against that. I thought, from the very start, it was a great thing.
One of the things I find really interesting that I support in this budget, specific to housing, obviously, is in the United States, there's a very large problem where they have large corporations and pension funds and REITs buying up single family housing everywhere. And you can be you could be in a situation where you're an individual offering on a property competing against BlackRock, which just is insane.
Full cash offer. They don't care. You have conditions
whatever. Like, how do you compete against a $14 trillion behemoth? And they seem to be trying to get ahead of that here in Canada. It hasn't happened yet, probably could be something that could come down the pipeline in the future. And so they're trying to cut that one off at the pass, which is amazing to see a little bit of foresight from the government, where, we're talking about something earlier at the start of this conversation about mortgage fraud and how that took 5 years to come in place. On this one, they seem to be actually cutting this one off at the pass, which is really smart and positive to see. So based on everything that you're seeing now, or this segment of our conversation, portion of our conversation relative to finance, is there anything that we're missing, or is there anything else that you would like to add?
The foreign buyer ban extended for a couple more years as well.
Yeah, that was prior to the budget. That's secondary to the budget, but yeah. And how do you see all of this, like specific to clients thinking about refinancing or buying or selling and trying to understand do you really see any of this? I mean, there'll be specific situations where some of these policy changes may be helpful, but is this really going to change the market or change an individual's trajectory in one way or another?
I don't know how much it's going to move the needle, at least in the GTA. I think that's just the reality of it. There was I think it's for renovations up to $40,000 that you can use as a home renovation loan. And if you read the wording on that, it actually looks like even for properties that are above $1 million. So keep in mind, if you want to purchase a home and it's above $999 and 99 cents, you absolutely must put 20% down. You can't get mortgage insurance. The way that it's worded actually looks like, and this is, it's short on details, but the way that the budget is worded looks like even someone that has $1 million plus property that typically wouldn't qualify for mortgage insurance will be able to do so in some way to qualify for one of these, like $40,000, to basically build a secondary suite, which I think is great. I think, a lot of borrowers, at least that I'm talking to, have interest in wanting to have a secondary suite, especially with interest rates being so high. I'm sure you see it on your side as well. Even, someone that's maybe not even a first time buyer, but someone that's maybe selling a condo and looking to get into a house, having that rental income coming in from a basement suite, for example, to offset their expenses is a very important part of the decision process for them. So curious to see what that looks like when they roll out more details, but I thought that was kind of neat.
Yeah, and that was something we're going to talk about a little bit later on. But since we're talking about it now, and part of that's cool. It is something that I've actually talked about and recommended as an idea to help generate supply. And it's just, if you think about the cost that it would cost the city or the province or the federal government to build one apartment condo, if it costs them $400,000 versus giving an individual $40,000 low interest loan and have them take the initiative to build or add onto their property, makes a lot of sense. We'll see if that actually gets executed or not. But I do think in principle it's a great idea for sure. So again, these are all going to get a lot of attention in the media. How much this is going to move the needle? Probably not. I think we both agree with that. One of the things I've been ranting about on the Fox Marin Instagram page is the Renters Bill of Rights. Talk about a nothing burger. This is not going to really impact anything. Maybe get a couple political score points in for the Liberals, who are hurting in the polls right now. But other than that, it's not going to affect anything. The three major tenements are a national standard lease for anybody who's involved in real estate in Ontario, for that matter. We would know we already have an Ontario standard lease. And the rental markets basically are a provincial matter in terms of jurisdiction of legislation. So I don't even know how the federal government is going to inject themselves into provincial manners in this way, but all this will end up doing is just creating even more paperwork and confusion. We have a lot of investor landlord clients, and I can tell you the amount of paperwork involved in doing a lease now, far more complicated than in a $10 million agreement of purchase and sale. You're talking 30, 40 pages of just kind of, in most instances, nothing. So maybe there'll be 90 pages or maybe it'll stay at 60. But either way, it's really not going to add to the equation. Having past rental history, I mean, in Toronto, pretty much all properties other than basement apartments are rented on MLS. So people already have access to rental histories of units or houses. Rental payments counting towards building a credit score, that could be helpful. I foresee it maybe being more helpful to landlords who can then in turn say, well, if you don't pay me, you're not going to have a great kind of credit score. And I think the real issue here when it comes down to affordability, there's a great, well, not great, but a really interesting report that was put out by Zoocasa. And what it showed was the average median income of $80,000 a year in Toronto. It would take 39 years to save up for a down payment of $200,000 to buy $1 million property. So it's probably less about the credit score. People get credit cards and people have all kinds of ways to build up their credit. It's more about how people can afford to buy properties in Toronto. And I don't see any of this helping renters or, for that matter, a renter who wants to become a real estate owner of property here in Toronto.
Okay.
That's because you're smart. Smart people agree with me. Okay, and then on the supply side, I find it really interesting. So this one, I have no idea where this is going. In principle, it's interesting. The Liberal government says that they're going to convert underused federal offices into homes. The budget promises for $1.1 billion over 10 years to transform 50% of federal office portfolio into housing. The government also wants to take 1,700 plus Canada Post offices or all across the country that can be used to be built into new homes while still remaining postal services right on that site. So they're dedicating $1.1 billion for that. And they're also dedicating another $500 million to launch a public land acquisition fund to buy back land from various levels of government. They also have another $15 billion program starting in 25-26 that brings the entire program up to $55 billion for apartment construction loans. Now, I think that is really going to be interesting and helpful, especially in big cities like Toronto that are just so starved for inventory. So we'll see how that all sort of unrolls itself. But we're talking about a lot of money here and resources that's being thrown at this, and how this all plays out, I have no idea. What are your thoughts on it, Jason?
It'll probably cost them $50 million just to put a study together to figure this out. I think it's been proven that it seems like, having private companies build housing is better than having the government involved in it. I think it'll probably be more cost effective if it's not on the government's plate. So I think that's my concern.
Yeah, anyone from Toronto watching this and just having watched on the sideline the creation of the LRT across Eglinton will know that the government gets to a point where they're no longer have a budget or a finish time on a project. And somehow, because they're the government, that's okay. I think if the government just steps back and just lends out money to the private sector at low interest and let the private sector, the development world, actually do the heavy lifting, I think that will be a lot more efficient than any other type of metric that they may be proposing here. But I do think it's interesting. I mean, the government is sitting on a lot of land, and it would be nice to see that unlocked. But there's been talk of this for years, and nothing has happened. But at least it's talk, and at least it's forward movement. So the real question is how are they going to afford this? And they're trying to get to this goal, which was almost laughable. Like when Christina Freeland introduced this budget, she talked about the creation of 4 million new homes by 2031. There was a lot of laughter in Parliament with that number, knowing that since 2005, we have created 200,000 homes a year. So, funding aside, and we'll get back into that and how we're going to pay for this and supply and financing. I mean, we don't even have the workers to build this amount of homes. Like it's just a ridiculous number. It's very aspirational. It's great to have aspirational goals. But, if we end up building 300,000 homes across Canada, over the next 5 years, get to 1.5, I think that would be a massive achievement and undertaking. So I think this is like super ambitious, and I think there's a lot of hype and a lot of money that's being thrown at this, but I just don't see us getting there. Do you, Jason?
So I remember just having, I think it was Benjamin Tall was talking on a presentation we were doing last year, and talking about, it was when the Ford government wanted to build 1 million new homes over 10 years. And our current workforce, I can only handle, I think he said 40 to 50,000 new homes a year, and they want to build 100,000. That's in Ontario. It's ambitious. We'll leave it at that.
Jason, try and get a drywaller or a plumber to show up at your house.
Totally.
Or an HVAC guy. Like it would be nice, but I really don't see us moving the needle, going back to your term, in any way that's really going to get supply to keep up to where demand is where we need it to be. But going back to how are we going to pay for this, why don't we talk a little bit about the tax hike that the Liberals just happened to throw into the mix here, and what that means, and maybe you'll walk us through that, Jason?
Yeah, for sure. So there's a change or an increase to capital gains. Instead of, being 50% of the gain at your marginal tax rate, now 33%, or 2/3 of the gain at your marginal tax rate for anything above $250 for personal. It's from $1 for corporations. So if you have a holding company and you own a property, you're paying, instead of paying half the gain at your marginal tax rate, you're paying 2/3 the gain at your marginal tax rate. So that obviously is obvious, that got a lot of people talking. I could see on social media today and in the news, had a lot of people talking. I think there was also an increase to the lifetime exemption for capital gains for like a Canadian business owner. But yeah, let's talk about that. How many people, these are just, one-off investors that have bought, someone said it best, most companies and most employers don't have pensions anymore. People are buying real estate as part of their retirement plans. And now we're looking at, seeing a pretty significant increase in capital gains when they go to divest themselves of the property in the future.
Well, it's significant. 4.4 million Canadians, 11% of Canadians own a second property or vacation home.
Yeah. It's very much a concern where, when you continue to see rising taxes, at some point, you're going to start to see people that are going to end up finding another country to live in if they're financially well enough to do it, or finding ways to skirt around tax, and people will start evading it, right? So I think that's a concern, right? That's a concern.
It definitely feels like the frog in the proverbial boiling pot.
Yeah.
And it's really disheartening. I mean, I read a quote a tweet by the founder of Spotify, who created 11,000 jobs, and definitely a Canadian icon and innovator. And he wrote, as a result of this, he goes, "Canada has heard rumors about innovation and is determined to leave no stone unturned in deterring it." And when you start to take continued moves like this to stop companies from wanting to reinvest, to stop individuals from wanting to invest, to having people who have assets and not wanting to sell them, just refinance them and pull the cash out for free and do something other than reinvest, it starts to suck money out of the system or out of the country. And it's becoming a real problem. And recently, the Bank of Canada came out and said that our productivity as a country is dropping like a stone relative to the G7, that it's a break glass moment. Mm-hmm. And I quote, a break glass moment, because we are really, really, really losing our competitiveness. And so we have all these big announcements and all these big programs, and yet really it's going to hit the core, which is the corporations and the companies and the small businesses and the investors, and it's going to continue to put pressure on them to dissuade them from reinvesting. And what's interesting is that it was actually the Liberal government maybe 20 years ago that took the capital gains from 67%, from 3/4 down to 50%, to unlock innovation and to unlock investment. And now they're bringing it back up again. And it's an unfortunate thing. Are you getting questions about that from clients, or?
It's so new that they're starting to trickle in. Again, I'm seeing it online. I'm seeing the angry tweets and reading all the comments, and yeah, sparked a nerve. I think a lot of people are frustrated already. If you look at how high our tax rates are, and then adding just additional taxes on top of it, it's to your point, it prevents people from wanting to reinvest. That's it.
Which is really sad. I mean, you're looking at a country where 53% marginal tax rate after real estate taxes and HST and land transfer taxes and excise taxes and the taxes on top of the taxes that we don't know about, you're taking home less than 30%. There comes a point where you start to really question, why you're working so hard and taking on all this stress. So, rather unfortunate news. And, some people watching this will be like, what's another few percentage points from people who can afford it? But those are the people who can also move or take their capital elsewhere. Agreed. or just stop trying or contributing.
Agreed.
So I saw this real interesting stat actually, where it looked at all the billionaires in the United States, so the top Fortune 400 billionaires. And there's a movement in the US and Canada, but there's also a movement in the US to more heavily tax the ultra wealthy. So if you confiscated all of the wealth of the Fortune 400 Americans, like the top 1% or 0.5%, that would leave you with enough money to fund the US government for 6 months. That's it. And then what do you have left? Because these are the top employers or innovators.
Yeah.
It is crazy. It is crazy. So I think it's disappointing overall because of that. We've got a lot of interesting new policies and a lot of spending, but at what cost? And, is this something that's really going to be helpful to the economy and really helpful to the market long term? Short term, there might be some political points in here for the Liberals for their target sort of market on this marketing campaign for this budget, which is first-time home buyers, renters, Gen Z, Gen X. But at the end of the day, in the long term, I don't think this is going to help anybody.
Well, the stimulus coming back into the economy potentially create some further inflationary pressure at some point.
Exactly.
Yeah.
Exactly.
Tax and spend.
Maybe changes on the way at some point in time. We'll have to see about that. But Jason, thank you so much. Is there anything else you'd like to add in terms of commentary about the budget or where you think this is going to lead things in the next 3 to 6 months?
Like to see more information come out, big on ideas, less on, very little detail. So I'd like to see how some of these programs will roll out that will help people get into homes and see if it is, actually something that will make a difference. So wait and see. We'll talk about that again in the future.
Awesome. Jason, thank you so much for joining us. If you've made it to the end of our journey and conversation here today, thank you so much for tuning in. If you have any comments, we'd absolutely love to hear from you. And please be sure to hit that like or subscribe button. And we're sure to see you next week.
Thanks so much.